Hey, everybody. Happy Thursday. Welcome to November's edition of the Flagstar Flex series. It's crazy to think we started this 18 months ago. Our first session was, I guess it's about 18 months ago in reality when we did our first session. And again, the idea, obviously, bringing value above and beyond as a business partner working with you on loan level transactions, but bringing value to you over that time period, some pretty good content. And I'm really excited about today's session. I think it's timely. I'm really excited about our guest speaker. I've known him for quite some time now, and I was really excited when he agreed to do this with us for educating and bringing value to you, our business partners. So, but I want to start again, like I always do. First and foremost, number one, hopefully everybody's doing good, safe, healthy, you, your loved ones. And then two other things. One, as we're doing this today, I was reminded that it's the Marine Corps' birthday, right? So for anybody on the call who has that in their background, obviously family, friends, loved ones, whoever, happy birthday to the Corps. And then obviously tomorrow, we'll be celebrating Veterans Day as a country, and I wanted to take time just to recognize that. Obviously, I think sometimes there's some confusion out there, but obviously, if you look at Veterans Day, it is the day that's set aside to thank and honor all those who have served honorably in the military, either in wartime or peacetime. Right? We have Memorial Day where we remember veterans who have given the ultimate sacrifice, or individuals that have given the ultimate sacrifice. But tomorrow, obviously, it's a celebration and a day to say thank you. So obviously, I thank anybody that's on this call, any of your family members, loved ones, close relatives, friends, you name it, for their service. And obviously, if tomorrow there'll probably be a lot of celebrations in our local neighborhoods, right? Take part in them. Say thank you to somebody, as a veteran that you see during any of the parades or ceremonies or things that you may attend in your local neighborhood. So again, happy birthday to the Marine Corps today. Happy Veterans Day to everybody on the call tomorrow, and anybody that may be in your lives that is important to you. Happy Veterans Day. And then look, with that being said, I think I'm going to introduce our guest speaker so we can get going. And I'm really excited because not only am I excited about his content, but I get to say happy birthday to the Marine Corps for him, which is the branch that he served in. And obviously, a day in advance, I get to see him and say happy Veterans Day to Christopher. And for those of you that don't know Christopher, I'm going to give you a quick little synopsis because he's not the guy that wants me to draw out like a whole laundry list of what he's done in his career. But specific to today's session around VA and VA lending, he's the founder of Vetted VA. It's an organization that educates real estate and mortgage professionals about VA lending to help veterans purchase properties, take control of their lives. He's a Marine veteran, as I mentioned earlier. He's an entrepreneur. He's an educator, a motivator. I've seen him speak numerous times at a lot of conventions and a lot of conferences. And he understands personally how a VA loan can change the lives for those individuals for the better. He's certainly passionate about the community, community building in general, veteran advocacy, and really, making sure that a vet is taken care of from a VA lending perspective. And he really goes out of his way and gives a lot of his time to help educate anybody in relation to better serving the VA community. So with that being said, I know you can see him. So Chris, welcome to our Flagstar event for November. How you doing, man?
John, I'm great. Thanks for having me. To everyone else out there, what's happening? Hope you're doing well. To all of the jarheads in the room, I'd have a couple things to say before we kick this off for y'all. I would say, one, Semper Fi, happy birthday. Don't add to the population. Don't subtract from the population. When you get drunk tonight, use your Arrive Alive card, right? And the most important 6 inches of the battle space are the 6 inches between your ears. Make good choices, but definitely go out and have a good time. Go out and celebrate. It's a really cool part, I think, after you get out of the military and you lose the daily connection to something that you really just becomes who you are. I think that times like this, as far as the Marine Corps birthday or Veterans Day and different things, use it to get together with your brothers and sisters you served with, Remember those days, what they meant, why they mattered to you, and carry some of the best parts of you from that time period forward into your tomorrow for Veterans Day. But until, happy birthday, y'all. I hope you have a good one.
Yeah, and well said, Chris. I always love talking to you about your experience. Yeah, I think you're one of the most passionate people I've met in this arena, and certainly authentic. And with that being said, I was really excited for you to come on today because obviously, gang, for everybody watching this, right? And again, as we always say, down below is where you can put in any of your questions. We'll try to get to as many of them as we can. I have a feeling we're going to probably answer a lot of them in what we're going to talk about today. And if we don't get to them, we'll certainly follow up with you like we've done on past sessions, just based off of the time. But as we talked about, the VA, VA and VA lending, it was important for me to have this conversation today, or this segment today. One, I think obviously timely around Veterans Day, but two, you as an originator in the space, I think over the last couple of years, there's been so much volume that you probably stayed in your lane, right? There was so much to do, and the market size was a 4 trillion size market ish during the pandemic. That I know Chris and I talked about this out at one of the conferences in Vegas. I don't think as an entity or as a group that we probably did a good enough job, one, serving this community, but two, educating ourselves as loan officers to be able to understand this product specifically, understand all the misconceptions, and understand how you can arm yourself with the power and the knowledge to then have that conversation, not only with the vet, but with other people involved that may influence minds and decisions, like the real estate agents or settlement companies or title companies. And I think it's more important now than ever, with volume trailing off. You need to be able to work with any individual that you come in contact with that gets referred to you. And there is no, in my opinion, no bigger opportunity for individuals than to educate themselves on this type of lending, VA lending, and how you can serve the veterans and the military from a standpoint of, owning a home, the value and the ownership of owning a home, and what that does for you as the LO, but more importantly, them as the new homeowner, and what that does for them. So, Chris, I'm glad you could do this today. I really appreciate it, buddy. Can't say thank you enough. And if you're good, you want to jump in? Let's just get right into it.
Always. I'm ready to go. Let's do it.
So I know you guys at Vetted VA have done some really good work on what we're throwing up here right now, which is some of the common misconceptions. So I wanted to kind of go through them with you, and we'll talk a little bit about more where they can go to get more knowledge and education, and you'll kind of, talk about what you're doing at Vetted VA. But let's just start like the very first one.
Well, real quick, if you don't mind, let me throw something in there really quickly.
Yeah.
The kind of bottom line up front for everyone listening, the goal of this document and the discussion that we're having here is to help you have a fundamental understanding of the full capability of the VA loan. Because what I would submit to you is this: it's my personal belief, when I review the data and the circumstantial evidence with time, distance, and direction spent doing both of those very specifically at scale, 9 times out of 10, when it comes to a veteran having an issue or being told there's an issue with their loan, it's not the actual VA loan. It's the professional. It's the lender. It's the circumstance that was unprepared for, right? It's something that is otherwise preventable if we have a full understanding of the capability of the product. And the importance for that is this: there is one mortgage in the United States that was earned contractually. If you're in a mortgage, you can understand the fulfillment of a debt, of a note, precisely what an enlistment is. And because of that honorable fulfillment of it, they gain access to a tool that understands their unique circumstances that are different than others, potentially. And it allows for them an opportunity to reintegrate with a society that for years they've been deliberately disconnected from due to their service, right? So the importance that we get it right here is it's the only loan type that's earned. Don't be the reason why a veteran doesn't have the opportunity, or a military member doesn't have the opportunity to use something that they've contractually earned. And I would submit personal ignorance is usually the thing that does that. So with that said, these are some of the most common myths. Sorry, John, we're getting into it. Apologies for interrupting there.
No, hey, that's a great point, man. I think that's powerful too. I think individuals need to understand that, right? This isn't just any other loan that's out there. This is a loan that was earned by the individual that you're going to be talking to from a veteran perspective. So I think that's great. That's a great segue into this, right? And because while it's earned, I like the word you talked about, which is ignorance, right? And I call it's like a lack of understanding, a lack
Right.
of education, right? Use however you want to phrase it. But I think you've said it to me numerous times. Like you've talked to people. There's probably people on this conference or this call that are watching this going, oh, well, I tried to do a VA loan 3 years ago and it fell apart. It was a nightmare. I lost the real estate agent's, referral, which by the way, that's probably the only time the real estate agent ever referred them a loan. And to your point, that has nothing to do with the VA loan itself. That has to do with everybody else that was probably involved in the transaction.
100%. The worst VA loan I ever did was the first VA loan I ever did, and it was on our personal home in Colorado. It was about a 4.5 month process with a short sale that everyone thought couldn't be purchased with a VA loan. And I learned, unfortunately, a lot of things through that very first process because the distance between theory and reality is quite vast. And I think that's a big thing that people need to understand too. So I think encountering some of these myths will be a great thing. I'm really excited too about talking to you about, well, what do you do? How do you get better? What does that look like after we
Yep.
kind of go through some of these things? But more than anything, I appreciate again, Flagstar and y'all giving opportunity for this discussion because I think it's an incredibly valuable one to veterans from what I see in my own personal experience as well.
Totally agree. So let's talk about the first one, right? Because you've
Yep.
done some, like you talked about, you've done some extensive research on this and
Yeah,
have
so real
data.
quick, and
Yeah.
good Lord, there's like how many preferences are there? I want to say thank you to our partners on this, Polygon Research. They are a third-party data analytics company, right? They analyze all sorts of data. They analyze our own internal data, and they help us to produce it into usable intelligence that can inform our choices and discernment, right? We have collection of information, and then we have processing of information. And after all of that entire process, we have discernible intelligence that can feed and should feed our decisions. And so that's exactly what this is. The first myth, like VA loans are denied at a higher rate because of risk. This one's a very easy one to get in and attack. If you just simply look at, if you segment HMDA data for 2021 on VA loans, specifically applications versus denials, you'll see that the lowest by percent of denials from applications by far, by a pretty good lead on all of them. Certainly over conventional and FHA, which a lot of the times people think those loans have a likelier or a better chance of closing, right? Well, that's not what the data says at all. And so then we look at it from the other side as well, just to get another picture of applications compared to actual originations, right? So we already know that denials are apologies. 1 second. Dogs, right? Always reality, that's what I'm talking about. Theory and reality, right? We didn't
That's
prep
right.
for my dog's barking. But you'll see that on the other side, the counter of that, and this is what I want to, it's kind of a good thing to consider. When you look at origination rate for applications compared to total or finalized originations, you see a 72.4%, still leading FHA and conventional, but just behind FSA or USDA, right? Rural loans at a 72.8%. So you think, well, wonder that doesn't make sense. They're denied at a lower rate, but there are less applications that are originated. Well, I think this exists because of things like withdrawn or changes of loan types because of the ignorance that we're telling these vets, and they change because they think they're getting something better by not using their VA loan, or they think there's something wrong with their VA loan. And that's why I think this disparity doesn't show what you would expect to see just simply looking at the denials. But by and large, VA loans are denied at a higher rate, like they're harder to get closed. It's a farce. Look at the data. I mean, that part's not hard to see at all in a collective analysis of 2021 and 2020s, or any other years for that matter, is HMDA data.
Well, and that's what I like about the conversation we're going to have with you today, right? And for everybody on the call, this is all fact based. This isn't opinion. It's not,
I know I need Maury Povich on here. It's like, and a test determined that was a lie. That
right.
was a lie.
But think about that. If you're an LO and you're trying to build a relationship with a real estate agent and you're talking about VA, or think about this if you're an LO, how many times has a real estate agent instructed a seller not to take an offer from a VA on a VA loan, or take an offer, a conventional offer, instead of, maybe this offer, because of a fallacy that can easily be debunked in regards to facts, statistics, and data. And there's the first one, right?
Yeah, absolutely. So hopefully everyone has a very firm takeaway. You can look at the report and you can go to vettedva.com and look at debunking VA loan myths, the very top left tab on the navigation bar, and you can kind of see the data for yourself. And then I would tell you, if you still disagree, dig into it and have a dialogue. If you If you think that the picture is something else, because I would love to encounter reasoned opinions, fact, like based in things that are able to be confirmed that state some of these things are true. Because in the best of our ability to understand the truth of the matter, it's simply false. It's an antiquated belief, and it's something that unfortunately people hold over largely due to their circumstantial experience, which is the fault of the people typically involved in the process who are simply uninformed.
So what do we think about number 2, Chris? VA loans are more expensive for veterans.
Yeah, I love this argument because I hear it from a lot of talking heads. And I'm not going to name any names. I don't want to give them any shout outs at all. But I think that there's strategies, if you dig into them, you can find the failure in them pretty well, even if you follow them for a little while, as I have in certain places. But as far as expensive, I mean, there's a few different ways to measure this. A lot of people, do it differently completely. But when you consider the data and what it says, right? When you look at our report on this, what you're going to find is when it comes to an average interest rates, VA loans have a much lower average interest rate for 2021 than any of the other loan types did, conventional, FHA, or USDA. The average interest rates on, and this is HMDA data for VA loans originated, was a 2.87%, right? The next closest was USDA at 3.03. It's about a 0.25% there, right? Conventional at 3.26 and FHA at 3.15. So by rate, certainly cheaper. And from a cash flow perspective, I would argue that's an incredibly important thing. Overall, the value of debt becomes more the lower it costs you, or the less it costs you in a continual basis. So looking at it from another lane, okay, well, what about origination charges and discount points and those types of features that added in? We break all of that down and we show you the net differences of those as well. And what you can see is the only place where it becomes even arguable to say the VA loan has an expense that's kind of heavy is with the funding fee, right? Well, there's an upfront funding fee on all government loans, FHA and USDA, and conventional loans don't necessarily have an upfront funding fee, but the requirement for down payment oftentimes absorbs the same amount of capital displaced from the consumer, which is the most important impact. The only difference is the funding fee can be worked into the note itself and doesn't have to be paid at closing. It can be paid with concessions. It can be paid a few things. And the reality is many veterans getting out of service today and those in the past qualify from having a service-connected disability compensated from the VA so that funding fee is reduced to zero effectively. Right. And so there's different costs. We break down some of the funding fee costs in the report as well. But where you would argue that the funding fee increases the initial cost to the point it makes it less desirable, it's not accurate at all. You still have overall on your other charges and credits, the net of total charges and credits, the best circumstance again with a VA loan versus the others by several hundreds of dollars up front. So the interest rate's cheaper, the upfront costs are cheaper, the out-of-pocket expense are cheaper, and the reality of having a service-connected disability makes it even that much better. So from a VA loans are more expensive for veterans. Like, okay, well, show me what you mean by expensive. Life of the loan expensive? Like, it's easy to say, hey, because of this funding fee, it's more expensive. But the reality is, it's not from a cash flow perspective. It's not from a cash displacement perspective, and it's not from a long-term cost perspective either. Certainly because of the better rate guarantee that you get with the VA loan. So kudos to the VA guarantee and all of the people at VA Guarantee that institute the loan product. They do a phenomenal job to make it honestly. It's the most efficient product on the mortgage. It's the best cost efficient. To hear people say it's the most expensive, it's like it's opposite day. That's what it is. We're playing opposite day.
There you go. It's like Bizarro world, right? We're in an alternate universe.
And I understand why things, given the content that's been put out by a few people and how it's positioned, I understand why that they've been misled. It makes sense. Well, they should look at the data though.
That's the point, right, Chris? So we're two misconceptions, myths in, right? And we're going to go through the rest of them. But the reason why I really wanted to do this session with you is that at the end is making sure everybody understands, like, you have to educate yourself, right? You have to formulate your own opinion. Don't let others influence you. The people at Flagstar on my sales side, they always hear me say a couple things, right? Control what you can control. To me, you're in control of what you want to learn, how you want to educate yourself. And then your attitude and your effort are two things nobody can take away from you, right? So at the end of the day, don't let other people influence your decision on this loan, or let a past experience on 1 or 2 loans that you did 3 or 4 years ago that probably, let's face it, as you mentioned earlier, probably had absolutely zero to do with the loan and more with the individual loan officer, the company, the underwriter, like a lot of those things 3 or 4 years ago. Man, there's a lot of parts in the equation, but already in 2 minutes, you've heard statistical data from a HMDA perspective that tells you it's the exact opposite in really the grand scheme of things. So let's keep that going, Chris. Number 3. This one drives me bananas. So I'm not going to even pontificate on it. I'm going to let you handle it, but it makes me furious when people say this to me. People with weak financial backgrounds use VA loans or other no down payment mortgages to buy homes. And I'm assuming your dad is going to say the exact opposite, but go ahead.
So we look at and a lot of these, so just so we're clear, we don't come at this to the point of how do we like break the back of this argument. It's like literally, well, it's like, okay, if we were to argue against this, what data sets and what analysis would be needed to show context to the total picture that creates the choice in our own mind of what's what, right? And so we look at this one a few different ways. We pull in some data from the Survey of Consumer Finances, which shows U.S. family trends, segments veteran audiences from that. We look at the veteran population compared to the non-veteran population. We look at the veteran population compared to the veteran population. We look at the different age segments of the population, comparative things, and then the similar, the same service connection comparisons, so that we can really try to dig into are veterans weaker and less financial capable than other people? And here's what we find: veterans are just y'all. They're just people. They're a wide assortment of people who have a little bit different of experience, but from a credit profile, their credit's just as good or better, arguably, in certain buckets and certain age groups, right? Their ability to earn cash flow from a revenue perspective is very strong and arguably just as strong. Their ability to have liquid reserves, savings, equity, nested equity, again, just as high. Their ability to put money down, even if they choose not to, because many of them actually do. There are a lot more loans, and we go into that here in a little bit too, where veterans choose to put more money down because they have the ability to, for different reasons, which I personally don't agree with, whatever, right? My note's at 2.25 at 640 for 30 years. I got 27 left. Like, extend that thing, please. I'll play that game all day. But I guess all I'm trying to say is, from a person with a weaker background being the people that use the VA loans, there's nothing that I would see that would argue that point. Even anecdotally, with loan times, I've broke vets, I have broke civilians, I have rich vets, I have rich civilians, I have rich foreign nationals, I have broke foreign nationals. It turns out humans are both on both sides of the aisle. But I will say, on trend, the veteran perspective on their financial disposition is arguably just as good or better than like non-veteran specifically counterparts. We didn't go into trying to break down, because you can only get so much information of the loan types, the financial profiles of who uses what loan types, because what we see too is down payment necessarily, even though people with less would generally put more down. That's not always the truth. When I use my VA loan, I'm not putting any money down. Like, no, thank you, because what does it take to get it back, especially if the terms and ability to carry to where we need it to be. So we show from, and if you go through the charts and just kind of all the perspective from mortgage ratios to rent mortgage comparisons to wealth percentages, veterans are 18, or homeowners that are vets are 18 times wealthier than renters that are vets. We analyze a lot of different profile perspective of personal finance the best that we can from the different things. And it's just not true that veterans or people with weak financial backgrounds use VA loans or other no down payments. I mean, there may be down payment programs where that tends to be the truth, but it actually isn't with a VA loan. They use the VA loan because it's cheaper, because it costs them less out of pocket, because it's cheaper long term. And you can even get to that data, the why, where they tell you why, in another data set where veterans households are answering questions of why they chose this from that, and what values were there for them.
Well, and again, you'll see it on the bottom scrolling through. I know Chris has said it a couple of times. If you go to vettedva.com, and when you get on the landing page, at the top of the page towards the right-hand side, you're going to see a link that says Debunking Myths. Click on that, and the report and all the data that Chris is referencing and talking to, you'll see it there, right? So yeah, I'll leave it at what you said, because that one always bothers me when people try to classify people based off of the loan type, that they may not be as qualified as another borrower. I mean, I've been in this industry since 1994, and things have certainly progressed to a point where if you're a qualified borrower, you're a qualified borrower, right? Like, and at the end of the day, to get a loan in this, in 2022 and beyond, it just, that argument never holds water with me, especially on VA loans and VA borrowers. So I'm glad we talked about that. FHA conventional loans, I know we've touched on them a little bit. You used some statistics earlier, but I do think there's a misconception out there, especially in the real estate world, that an FHA loan or a conventional loan is always going to be better for the veteran than using the VA loan. So what does the data show on that?
Yeah, so for this one, we looked at it a couple different ways. Again, we looked at it even from, I'll go into it in a minute, but we looked at it from multiple angles. What we really wanted to focus in on, as far as comparative, like how do you compare FHA or conventional, saying they're better than VA loans? Well, most people, I think, would take the standpoint of cost, right, of interest rate. So again, we review that in a little bit of place. We look at special features for first-time home buyers, flexibility overall, right, and that covers more than just first-time home buyers, but so you have kind of price, you have flexibility, which is an incredibly important one as a means to judge which one's better. And then you have kind of requirement, liquidity requirement, amount of down payment, right? You can fit some credit profile discussions in there as well, kind of fit flexibility more. But we look at these three angles because I think that, the product that's most flexible, that has the lowest cost and the lowest requirements as far as for me to actually do this thing, right? Regardless of my circumstance, I think that would be what I would say as a consumer is better, right? So that's how we looked at
Yeah.
it from this standpoint. And what we saw are several different things. Again, you can go and check out the report, but um, veterans outstrip non-veterans 35% to 23% when it comes to homeowners owning their homes free and clear. So I think it's kind of an interesting thing when you start to dig into some of the facts about what the veterans with their finances look like, the loan types, the percentages of the interest rate comparatives, the cash to close features, the down payment requirements in there. And then even if you start to break into it, this is another thing that we wanted to look at. Conventional FHA and veteran loans all seek to serve minorities to a large degree, right? They all have different ways of doing so. The VA approach, you know what it is? One size fits all, and they empower everybody the same. And you know what the result of that is? VA loans help minorities get into housing better than even the minority program specifically. When it comes to empowering people with little or a lot and doing it equally, creating an equal opportunity profile, the VA loan does it the best. So as far as which one's better, FHA conventional or VA, better is a big statement. It takes a lot of context. I would argue that the VA loan is better at creating homeowners from a denial to an approval percentage. It's better at being flexible. It's better from a cost profile, right? It's better when you come to maintaining home ownership. Look at we go into that too, but the default risk profiles are much better for VA loans. The VA has always done a great job of keeping veterans in houses, as well as they've done with getting veterans into housing. So better being cost, risk, flexibility. Where's the first hurdle, the lowest rung on the ladder that lets me get going with this thing that everyone says great? I don't know how you would argue that conventional or FHA loans are better outside of a circumstance you run into where in this specific circumstance it was better for the consumer, but inherently they're just things, right? But if you look at them from a data comparative analysis, assuming them in a vacuum, right, that the veteran has the option of choosing from one of the three, I'm not sure which lens or angle you would cite or use to reasonably or logically argue your point to show me why FHA or conventional loans are better. They cost more, they're less flexible, they have higher starting points oftentimes. The results they achieved as far as continued home ownership are inferior, meaning the vet would have a higher risk by percentage of default, even though that's a bit anecdotal. It's not, it's the data, right? So again, on number 4, I had that one again in my mind. Absolutely false. And anyone that reads or hears any of this, excuse me, I would welcome a discussion. And I don't say argument. I would welcome a discussion on your beliefs behind why you do believe some of these things. And I would love to see what founds those beliefs.
Yeah, and I think, again, like we've talked about already, Chris, I think when you look at 4, to your point, better it's really a subjective term depending on who's saying it and how you view it. But I liken it more for the loan officers on the call. Like, again, this is educating yourself with the facts and the data to have an intelligent conversation with referral sources that you're trying to build, right? That may bring this misconception to that conversation, not having any real data to point to other than, well, somebody else in the office has said it, or I've had this one transaction. So I think you're seeing a common theme here, right? So go to the next one, because I think this comes up a lot too over the years, which is VA loan appraisals are slow. They take forever. They usually come back with low values, and it makes, the transaction, end quote, a nightmare at the end.
Yeah, I think this one's a great one, and it becomes, from a data perspective, one that's a little bit difficult to analyze in the same format we do everything else. And the reason why, in our example in the paper, you'll see where we don't throw some of those data tables in there, is because they're based on just our subset at Vetted VA on the data we track to provide this comparison. They're not necessarily the source data from the government institution that has the authority to declare what the actual truth in those numbers are. So we don't want to skew the picture based on a smaller subset or one that's not recognized by actually the source, the horse's mouth, if you will. And so when it comes to this one, I think it's important to look at a couple of things, and I'll reference for the first time something that I would invite everyone to go consider. The deputy director, John Bell, did an interview with deputy director of the VA loan guarantee with the head of NAR, National Association of Realtors, and they had a two-part discussion. It was really great, really informative on a lot of different misconceptions and thoughts from their perspective. And I think it's a really informing dialogue. They go into specifically appraisals. When it comes to analyzing the data, it's difficult for us because where we have relationships with companies where we can review conventional data kind of around appraisals, right? The VA loan guarantee itself and their appraisal process is such where we don't have insight into those data points. So what we have to go off of is our internal experiences in mass, which last year, amongst all of our Vetted VA professionals in mortgage originations alone, there was over 2,700 families helped from our professionals, and over $1 billion in mortgages specific to VA loan types in aggregate. So just to say, the data set isn't a small data set that we're looking at either. But I think that Mr. Bell's statements are incredibly declaring here as well. Their data site or sourcing that they're citing, again, I'm not unsure what it is, but he states very specifically that the appraisal process, because of the 10-day requirement in most areas, causes the VA loan or VA appraisal to be faster, as far as instances where value comes in low because of the ROV process and because of the Tidewater process specifically. There's really 2 points of application where difficulty arriving at value can be influenced simply by fact, right? And there's a process dedicated to it. So you're not reacting to a decision made. It's a discussion along the way. And VA also is the only loan type where, through the reconsideration of value or ROV process, let's say that I don't have the comps necessary to support the 5,000 additional in contract price that I am. There is a process where I can discern and state to the VA, as the veteran myself, what I perceive the value of the house to be from what I'm seeing in the market, the comparables that I can buy, the needs that I have, and they can even make the decision to allow value to come in and be corrected with an ROV to that price where there might not be comparables perfectly to paint that picture. And it's the only loan type that'll do that. So when it comes to a time frame of delivering appraisals, percentages of appraisals coming in low, processes to cure appraisal difficulties, whether they're low values or MPRs, minimum property requirements, it's all very fluid as long as you understand it, right? A lot of people don't understand what a SAR underwriter can do with the minimum property requirements, right? And their ability to work with the VA appraisal board and their process to cure some of these difficulties in a very efficient manner. And so again, I think it's ignorance of not understanding the process that allows you to understand the flexibility built in, designed to ultimately not benefit you, the professional trying to close a thing, but designed to benefit the veteran consumer who wants to get in a home, who needs to get in a home. You know, they've just moved 4,000 miles across the country back home after they've been in the service, disconnected from their community for 5-10 years, or they're moving to their a new base, the fourth in the last 2-year periods, spanning 10,000 miles over the last 3 years, right? So the flexibility is important.
Yeah, for sure. So I think, as you can see, the common theme, right? There's just there's facts and data that you can use and arm yourself with that intelligence to have that in-depth conversation. Go to the next one though, Chris. Sellers have to pay all the closing costs. Obviously, misconception for a reason, but go ahead and talk through that.
Yeah, this one is a misconception for a few reasons. I think that a lot of people not understanding the changes made to things like the wood destroying insect inspections, right? Or some of the other closing costs. There was always this, or in the past, let me say, there was this place where veterans could not pay certain non-allowables unless the allowables were common for the region or whatever else. So it was never this big issue that was made to be, and always the argument, well, I'm not accepting a VA loan because my seller has to pay all of those costs. It was really only, if anything, you could say the insect is like $75 inspection that we're blowing this up over that, huh? We got a higher offer. We can close just as fast or better for the consumer. And it's 75, it was that argument. So I thought it was pretty weak. That sense has long been changed now through circular process to where the veteran can pay those fees that are requirement of it. And different things can pay those fees as well. So just to say, the seller doesn't have to carry any extra cost for the veteran consumer. Period. And sellers right now, you're carrying extra costs for most people, whether they're in the form of concessions or you're dropping your price to remain competitive in a market where there's still not a ton of inventory, but buyers are all nervous. Costs are super high, right? So when it comes to sellers have to pay all closing costs. No, they don't. They have to pay any extra closing costs. There's nothing in addition to sellers have to do. If anything, sellers are benefited by having a more flexible loan type that's likelier to close at a lower cost to the consumer. Right. And even allow them in a situation where, let's say, they want more than appraised value. Okay, well, if the VA loan doesn't have a down payment requirement, meaning I don't have to put money down before I put any extra money down, then my overall cash displacement from my person will be less. My flexibility to do more will be higher, and I can have the ability to choose and the capital to choose something that some other people might not be able to. Putting 20% down is hard enough. Well, if you have to put 20% down plus an extra 10% above value, not that I'm arguing you should pay over value. I think value is an individual decision each and every time. And ultimately, it remains open in the future, depending on what you do with the investment becomes your asset as well. So sellers don't have to pay anything extra. Long story short.
That's right. That's right. And then I know there's all kinds of misconceptions, but the most common ones that you guys have identified, the last one, VA loans can only be used once.
So this one's a really big, important one. I've had a lot of people come out and say, well, this one, is that really a big common thing? Yes. And here's why. The number one audience of people that are eligible for a VA loan that have yet to use their benefit, and we can show by the data that by and large, income, assets, equity, all of those things, they are more poor than those who have, are the elder veteran community. Either they haven't used it because they feel like other people should and they didn't do enough, or someone told them it was bad, or they used it once and they didn't think that you could use it again because there were some crazy costs if you ever decided to, right? And so this is entirely designed to show the professionals and veterans reading and following along with it the different cost of multiple use scenarios, some of the different circumstances where you run into those, and kind of breakdowns of maximum guarantees on different pieces as well, right? Showing how you can use it multiple times and what it looks like, right? But we also go into showing how many people have used their loans kind of multiple times in different circumstances as well, to show that it definitely can be used more than one time. It should be used more than one time. It should be used each and every time it's viable, in my opinion. I've been a part of a lot of origination, and I would say that there are several times I've run into circumstantial where the VA loan was not the best to use. One of those such times where we did not have any VA disability whatsoever. The funding fee was north of $20,000 because of the nature of the asset. They were doing improvements to the property, would be refinancing and doing other things later, and arguably doing two loans when you know that they're going to be done with the excessive funding fee didn't make sense. So in that temporary circumstance, a conventional loan was better because we already had equity in the place as well. And we didn't want to be dinged with extra costs. So ultimately, we absolutely got back into the VA loan though, because it was a much better product for them long-term. And even with the additional carrying cost of the funding fee, when measured in total, it was a much better circumstance for the client in the size of loan that they were carrying.
Yeah. So look, I was just to say for everybody watching, right? Like, listen, I kind of sound like a broken record, but I keep saying it, right? The intent for us having, Christopher on today, and we'll get into some of the questions because I've definitely seen some questions come through. So we'll get into that next, is really about education, right? Like, it's about knowing this product, educating yourself on it, understanding it, being able to have an intelligent conversation. And what I liked in the last section that you just said was, again, it's in the end, it's what's doing right by the borrower, right? So in that particular situation that you were just talking about, the VA loan maybe wasn't right on that one transaction, but it was when that transaction was over, and then use the VA loan to get into that is what it sounded like, what you were kind of going through. But if you're just not arming yourself with the intelligence about this product and how it serves the veteran, you are blocking yourself out from a standpoint of being able to continue to do business in this space. It is more important than ever in the environment we're going to be in now, and probably going forward for, if either one of us or any of us knew it exactly, we wouldn't be on this call. We would have bottled it up and sold it to somebody, right? But all things point that we're probably going to be in, this type of environment for some period of time. So you need to be able to be well versed in any product that you can, service the borrower with, from a standpoint of being able to do a loan in 2023 and beyond. And there is, in my opinion, and I think you're of this opinion too, there is a lack of knowledge on this product that is, I think, sizable inside the loan officer community as a whole, right? There are some people that specialize it. There are some people that know it. There are some people that do a lot of that lending. But in totality, for the originators, as I look at it across the country, I think this is probably the biggest learning curve for an LO, because they've stayed away from it for maybe some of these misconceptions or past experience.
I would love for someone to show me one loan type that's more capable, that does more things, that does it in a more efficient, from a understanding of currency, right?
Yep.
Way, from doing it in a more, or excuse me, yeah, a more risk adverse manner, right? Like, I would love someone to show merit to the discussion that the VA loan or veterans in whole in this
Yep.
discussion are somehow less than the other types, because it's simply untrue. And so hopefully, if nothing else, if you don't believe that the VA loan is the most flexible, most cost efficient, only earned loan type in the marketplace that provides opportunity in the most equal manner to all different types, then you're living in a place that I don't know how you would reason to. And I would love to discuss what those things are again, because that's ultimately how we change the industry. Is we have more discussions around our belief systems. We become a little less insecure about why we're founding beliefs, and we show our reasoning to certain things, and we consider that we might be wrong each and every time, at least in an honest enough way to know that the conclusion we're arriving at is still valid with any new information. And so I think that for all professionals watching this, regardless of anything that you do, understanding what sources dictate what can and cannot be done for veterans in VA lending, right? The VA handbook, the 26-7, chapter 24 of the Ginny Selling Guide, some of the various manuals, the circulars, right? There are a lot of different sources of information. The best way for you to become familiar is to spend time in those sources, read through them. When you're going through live scenarios, dig it up in the source just to make sure that you can, because your ability to understand what you don't know after you realize you don't know it is going to be dependent on process. It's that, or you're going to be regurgitating information people feed you. And that's how we all become of the part of the process where bad information is propagated and we're perpetuating a false standard.
Yeah. So a lot of questions that have popped up pertain around something you probably were just alluding to, which is, how do I get started? Right. So assuming that individuals aren't real versed in it, just go back through, and I know you rattled those off real quick. Just talk about some of, like, where would you direct somebody today to get started?
There are a lot of places to get started. If you want to have a better understanding of something, Google. Google's the fastest place you can get started. You would already have done it to validate some of the things I'm telling you. Maybe you'll do it to arrive at some of the facts that I want you to consider, informing your opinion. Google's probably going to be the fastest way for any of you to, each and every time when you arrive at that situation where you say, oh man, I'm uncertain. I'm uncertain by 1%, right? If you can say I'm uncertain, or it's an opposite thing. If you are not absolutely certain, then you are uncertain, right? And so for me, if I'm 99% certain, I always question myself. Understanding where to go to get the answer, to get it from the source, not to get someone to hand it to me, is the most important thing that you as an individual can learn. It's important to have a network. It's important to have people to bounce reality-based questions or off of the theory-based answers from the sources. But if you have the inability to go to the source yourself, to locate, close with, acquire, extract, apply, backstop, and validate an uncertainty that you ran into. If you don't have a process for that, you'll fail eventually. We all do. And you fail with a process sometimes, but you'll fail much more frequently. And ultimately, those failures will harm and hurt people, whether it's you or the veteran or, whomever in the way. That's what ignorance does in this process where we're dealing with something that is literally a pillar of the American dream. We might not consider that what we do is life and death. It's mortgage, it's real estate, right? How many of you honestly right now in the quiet of never admitting it in front of anybody else have been the reason or a screw up that cost a veteran their home or that cost them a lot more because of a mistake or delay or because of something that you didn't know or they didn't say, you didn't know to ask, right? And their dream has died or partially died because of it or been delayed. Like maybe it isn't life and death, but destroy someone's dream, you know, and that's just as bad. People need hope and they need opportunity to pursue better things, and we're the ones that are supposed to be serving their ability to do so, right? So spending time in these sources is the number one thing that all of you need to do. Googling answers or Googling questions when you have things, getting into the handbook, going to the source. But there are all sorts of different organizations out there that take a different approach to training, meaning causing you to spend time answering, looking at, immersed in the world of VA lending, because it's very complex. There's a lot of things you can do, but there are a lot of things you can do. And that's what makes it super flexible, right? And so all sorts of programs. As a person, like there's a lot of argument out there and some of the like who's better, they're all good. Sign up for every single one of them and go through every single one of them with an honest heart to learn one thing new. Because what I'll tell you, the best of the best, the ones that I know that are truly good, are more concerned with what they still don't know than they are of what they do know. And that for me defines an expert. Are they more concerned with what they yet might not know, or is everything founded on what they precisely do know? Right. I think that remaining a student always and pursuing education is the most important thing you can do. So throw a rock. There are several different courses. Vetted VA certainly has one as well. I would tell you, don't take ours unless you're looking for like the Marine Corps version. It's not easy. I'm not promising you a rose garden. It's right now 35, 40 hours of the most frustrating VA training you've ever done. And we're rolling out another 24 hours or so in the next 3 months. So our desire is to cause failure as frequently as possible, because it's through that failure and continued failure that you learn to get stronger and get better to not fail, right? So as a training company, how do we see ourselves? Well, it's our job to make you fail in a very specific lane, repetitively, over and over and over and over, right? What your ability to retain and regurgitate is with us really doesn't matter a whole lot. It all relies on your ability to answer something when you're uncertain. What's your process? Right. And so we teach that front to back, from the sources, the handbook, Jenny May guide, our modules. We have over 12 modules now, from how to present strong VA loan offers to understanding the ROV Tidewater process to condo approval courses, but all in our basic movement course of micro tactical fundamental things that you need to understand to originate. So understand, with any education you go through, you need to understand the macro and you need to understand the micro, right? And so those sources, the macro pieces, your handbooks, your circulars, your selling guides, those pieces you're going to need to spend a lot of time in. I think reading them is a great thing. It'll be incredibly boring, right? But I think it's one way to get familiar with it, at least to learn the terrain of what the handbook is, where these wave tops and bottoms and valleys and rivers, like to learn that sort of facts and features, what's in each chapter. That way I'm proficient when I encounter an uncertainty and using my process to cure that uncertainty with a solution.
Yeah. So look, everybody, be mindful of the time, right? We try to keep this to a certain window. I think Chris, in that answer, just touched on a lot of the questions that we've seen come through. I do want to ask one more, Chris, and then I'll just kind of ask your thoughts on some closing comments. There was a question that came up around speaking to the veteran, right? Like when I'm a loan officer working with the vet and interacting with them, maybe from a personality perspective, a background perspective, expectations. What like feedback or suggestions would you give to anybody in relation to that?
Veterans are accustomed to structure. Veterans are accustomed to rank, to leadership, to authority. Veterans are accustomed to processes, and veterans are accustomed to speech that is very much in line with all of those things. If you're the person responsible for supporting and serving them, you're the one taking care of them, getting them across the place to the X, right? Then understand, if you don't have a firm understanding, if you can't relay your message in a way to let them know, look, yeah, I am actually in command here. I have this under control. This is where we at. And I know, yeah, well, grenade flew in from over there. We weren't expecting that, but we moved quickly. Here's where we are. There's where we need to go right now. And if we continue talking about it right now, that's not going to serve your interest anyways. Veterans are okay with authority. Veterans need and desire and will demand tact, right? There's a different piece there. Veterans don't want to know or think that you're uncertain, that you're not confident. And so your lack of answering, lack of responses, long delays to reply to simply say, hey, I'm on a call. I got your question. I'm not 100% certain. When I finish this call, I'm going to make another call. My third call will be to you to follow up and either give you the answer or set an expectation of when I will deliver that answer to you for certain. That type of response is one where you're present and accountable. That's what veterans want to see from you as a professional, that you understand what's going on. It's not above your ability to handle, right? And that you're present and accountable for the duty and responsibility that they've chosen you to support them through. It's their hope and dream. And you're the one that's helping them, guide them along their story, right? And so more than anything, when it comes to speaking to veterans, how do you speak to veterans? Well, again, they're all different types, man. There's rich ones, there's redneck ones, brown ones, there's white ones, there's tall ones, there's dumpy ones. They're everyone. And so the way that I would say speak to them is speak to them respectfully. Speak to them like you have an understanding of what's going on and be accountable to your statements. Don't be wishy-washy and don't tell them things that are untrue or that you think may be determined to be untrue later, because you're going to erode the trust and confidence that veterans will demand as a part of this process they go through with anyone.
Yeah, look, that's, I think it's well said, right? Just understanding I've always been a little bit interested in, like, how do you speak to a veteran? Like, are you kidding me? You're a human being, right? They're a human being. What do you mean? How do you speak to them, right? Like, but I love the point about understanding the DNA of how somebody's wired, right? Like, that is just knowing your client. So all those things you talked about, structure, communication, not that you don't need that for any borrower you talk to, but it may be even more important, right? Like, to your point, that example of, hey, I'm on a call right now. I got your question. I'm not 100% sure, but you're going to be the third call I make after I get off this, because I'm going to find the answer. I'm going to get you that answer within the next, hour, right? So love that. I think most of the other questions that came up, we probably talked on throughout the session. If not, we will definitely get with you. I would also, again, highly recommend going to vettedva.com. And again, when you get on the landing page, there's a lot of good information on there. Obviously, there's a lot of information out there, like Chris mentioned, from a lot of different companies. Obviously, Vetted VA, they do a great job. And at the end of the day, there's a lot of information. There's a lot of resources, but there is that debunking VA myths right on the landing page, on the top toggle. You click on it. I mean, he's referencing a lot of information on a 32-page document that they put together on that HMDA data, and a lot of other, I know you mentioned the company in the beginning who helped you with
Polygon Research.
There you go. I highly recommend you to go there. People ask, hey, what's a good starting point? Reading that document is a good starting point for anybody. But Chris, just kind of go ahead.
For any professional out there, I don't care if you're a Veterans United loan officer, if you're a person in title, a real estate agent, an underwriter, if you're on Facebook and you join Vetted VA for professionals only, any question that you have, we'll answer it in the same way we do for our veterans and our veterans only community, so that you don't have to be alone. The worst place to be, I think, is alone and unafraid. Sure, you're unafraid, but you're still alone. And there's a tactical disadvantage to that. And you have to recognize that. So if you're out there and you feel like you're alone and you don't have anyone to support, or at least kind of guide you to the right proper source, because you're still trying to find out all of those things, join our Facebook group, ask your questions. You'll see how our moderators engage with you and what our goals are with interacting and engaging with you. And I promise you this, any question you have will be answered, whether it's immediately or after a follow-up and confirmation from a viable source that can confirm. So that's another way to integrate, and a value that I'd love to offer people, because I think it's important to have a place you can ask. You can ask a dumb question. You can ask a maybe it's a fraud question. Like you have a safe place to ask the question so you can learn and grow and not be concerned with how yourself is presenting amongst larger people that don't relate.
Yep. So, hey, Chris, quick in closing. Well, and again, I appreciate you carving out the time. Any kind of closing thoughts, words of direction, wisdom in relation to VA lending and getting started, or not even getting started, just in general? Anything you want to close with?
You as an individual are wholly responsible for your development as a professional. There's nothing Vetted VA, me, or any other company can give you if you're unwilling to gain the ground for yourself. I want you to know more than anything, if you do nothing but spend time in the handbook, the selling guide, the circulars, right, reading these things, asking questions, you will improve. You don't need to hire somebody to make you better. Hiring a trainer to go to the gym is something maybe you do when you need training, specifically you're new, or maybe you've reached a peak and you need an extra push, or maybe you just are the type where like you don't need a cheerleader, but you need someone to come yell at you for a minute or two because you just do better when people yell at you. I don't know. I'm one of those. Like if I'm not doing well enough, yell at me better. You know. But whatever, if you decide to go through training, just know that it's like anything else. You're only going to get what you put into it. And I know it's a cliche thing to say, but it's very true. So if you decide that you want to be better at a thing, make sure you decide it, and then seek out something that you feel best makes up for the gaps that you have presently with where you're at, regardless of who you are. But you have all of the power, you have all of the ability at the tips of your fingers with Google to develop yourself, to ask friendly people questions in the places that we've already mentioned. It's simply that your choice. What will you choose on Marine Corps birthday? You do me a birthday favor? Will you do it for Veterans Day? The only loan type that's really earned. Will you choose to be better, or will you choose to get by and do pretty good, right? Because I think that matters, regardless of what loan type you're dealing with, too. I'm not asking you to do something extra for vets, but understand the loan type is more complex. The borrower type is as well. And your skill sets will need to be refined if you expect to be consistently successful in a dynamic and kinetic lending environment.
Great way to close it, brother. Always good having you, getting a chance to talk to you. I've enjoyed it, for a very long time, even prior to my Flagstar days, getting to know you. And I appreciate you carving out the time. And hey, number one, take your own advice tonight that you gave in the beginning, as you probably, hopefully, reconnect with some of your family members from your days in the service. Don't drive, right? That's a big. Get that out there. Happy birthday to the Corps, and then obviously tomorrow being Veterans Day, wanted to make sure recognize that and say Happy Veterans Day to you too. Certainly appreciate it, brother. Thanks for doing this.
Absolutely. And thank you. I appreciate you having us on and helping to get the message out so that hopefully more veterans are able to achieve something that's just life changing. One house changed my family's financial life. And I think it happens for a lot of people that way. And so I think we should all maybe take a little bit more seriously our efforts to actually train and get better at what we do for professional living. So,
That's right. All right. Well, hey, gang. I appreciate Chris doing this. Hopefully, this is pretty good content, and we'll obviously replay it. You have access to it. Couple things in closing. One, again, I can't stress enough. If we didn't get to your questions, or even if we got to all your questions, go to vettedva.com. There's a white paper that Chris mentioned throughout that he was referencing under debunking myths at the top. You'll see it. You can download it. And obviously, it starts there in my mind, right? You got to educate yourself. It's a great place to start. They're a tremendous resource from a training perspective. So there's a lot on that site. Check it out. I highly encourage you to do that. And then look, in December, we are going to replay one that we did earlier in the year. And I think we're pulling that up now. Here we go. Yep. So it'll be on 12/8, 2 p.m. Eastern. We're going to redo the one we did in March with Suleiman Ahmed. It was excellent content, like all of them. And this, I think, really is timely going into 23 in relation to, building your network via social platforms, but in a different way, right, on how to do it. So we're going to replay that one in December. And then we got January, February, and March lined up already for next year. So as always, cannot say, I guess it would be kind of really navigating digital platforms as I think about it, like this social media from a LinkedIn, Facebook, Twitter, TikTok, Instagram, all that stuff, right? So look, as always, can't say thank you enough. Appreciate you taking the time, whether you saw this in person live when we did it, or if you watched it after the fact in case you missed it. Certainly appreciate it. Hopefully it brought you some good content. Obviously a timely topic, one that I think a lot of us are passionate about. And at the end of the day, who doesn't want to get better, right? And what it's about is really educating yourself and making sure that you can have the intelligent conversation when you need to. So certainly appreciate it. As always, stay safe. And I'll end like I always do. Can't say thank you enough for your partnership with Flagstar. I know we've been doing this for 35 years in the TPO space, supporting brokers and correspondent lenders. Ultimately, the end user, which is the borrower on the other end, whether it be a purchase or refi. But we know we can't do any of this without you. We wouldn't be here longevity-wise supporting you through all those 35 years without your partnership. So we value it, we appreciate it, and we can't say thank you enough. So with that being said, thanks for joining. Looking forward to next month, and we won't see you before Thanksgiving as well. So happy Thanksgiving, happy holidays, safe travels. And again, happy Veterans Day tomorrow to all the veterans out there. We certainly appreciate everything you've done for us and for our country. So have a great day.